Over the past 4 days, Israel and Iran have escalated military strikes to unprecedented levels. Israel has launched some 700 to 750 airstrikes, using missiles, drones, and fighter jets, while Iran has retaliated with approximately 350 missiles and drones targeting cities such as Haifa, Tel Aviv, and areas near Mossad headquarters. Despite Israeli efforts to suppress footage of the damage, Iran's barrage has revealed unexpected vulnerabilities in Israeli air defenses, signaling a shift in regional military dynamics. Israel appears dominant tactically, inflicting significant losses, including reportedly 406 lives in Iran, among them nuclear scientists and IRGC leaders. Meanwhile, Iran's evolving drone and missile capabilities, employing new tactics that have penetrated deeper into Israeli territory, underscore a strategic surprise. Both nations are avoiding direct hits on U.S. assets, likely keeping the confrontation bilateral, even as the U.S. and UK extend defensive and logistical support to Israel. But who pays the economic price? First, Israel is estimated to be spending around $725 million per day on military operations alone, after over $1.45 billion in the first 48 hours. Overall costs could total between $80 to $120 billion, equivalent to 20% of Israel's GDP if the conflict extends. On the Iranian side, elite casualties, including nuclear scientists, might delight hardliners but hinder the regime's weapons programs. Globally, oil prices have surged. Brent crude is nearing $100 per barrel, up 8 to 13% since the crisis began. Gulf stock markets have dropped. Saudi Arabia, Qatar, Kuwait, and Egypt have suffered significant losses as investor risk-off sentiment spreads. If the conflict broadens to include Gulf or Hormuz disruptions, oil could reach $120 per barrel, reviving inflationary pressures worldwide. So, who benefits? In the near term, energy and defense sectors profit. Oil producers, pipeline firms, aerospace contractors, cybersecurity and defense companies are climbing. Safe haven assets like U.S. Treasuries and gold have also inflated. Meanwhile, global consumers face rising fuel costs, input inflation, and stress on central banks, potentially stalling rate cuts. For the common person, inflation bites, food and fuel costs rise, travel becomes expensive, and uncertainty puts jobs at risk. Small businesses suffer from volatile supply chains and rising logistics costs. Conversely, investors in defense and energy can find opportunities, while gold and bond holders enjoy a safe haven lift. Strategic beneficiaries? Russia, with ties to both Iran and Israel, emerges as a potential mediator, and gains a geopolitical win as Western attention shifts from Ukraine. Meanwhile, Gulf states, quietly backing Israel, aim to curtail Iran's regional ambitions. Core causes of the war trace back decades. Israel's campaign, Operation Rising Lion, aims to degrade Iran's nuclear and missile program. Iran retaliates to assert regio